Okay, we had a sell-off last week. We had the Fed pause last week and really canceling rate cuts going forward. They're penciling in one cut in 2026. Eventually, I think when they start cutting again, they'll probably be panicking and doing jumbo cuts. Again, doing absolutely the worst thing they can do at the at the wrong time. Got reversal signals on momentum on Friday with the sell-off continuing today. The Dow was down 41 points, down 0.09%. S&P down almost 11 points, down 0.16%. Nasdaq was down 0.59%. The Russell was down 0.81%. The VIX was up 4.83% to close at 16.5. We're gonna have three important things. The jobs report this week, three important things: the jobs report, the inflation CPI data, and the Bank of Japan raising rates on Friday is likely already starting to create a sell-off. Bank of Japan rate hike will strengthen the yen and begin to unwind the yen carry trade. I've talked about this at great length and detail, shown you the charts. We're already seeing it. The Fed cutting rates, but then pausing, Bank of Japan raising rates. Both of these things have had a negative impact on Bitcoin and the stock market. Bitcoin sharply down today. It's been down as much as 3%, down over 2% at the moment. Get the jobs report. Now, again, they skipped October. We're going to get the November data. 45,000 is the estimate. This is the September number. So we're going to get, in this jobs report, we'll get the October and November data. I think the way they'll do it, we'll get information for both months. I think that's the way they're doing it. What I've read, employment rate is supposed to tick up to 4.5% from 4.4%. Again, if this comes in at a negative number, which again, I'm telling you, it's going to happen, going to get a big negative number. We already had a small negative number back in June, negative 13,000. Negative number, if we get revisions from previous reports that are revised down into negative territory, this is a weak report or a negative number, the markets are going to sharply sell off. I don't know if we get it here this time, a negative number, or in the near future, but it is coming. When the recession started in 2007, started getting negative numbers ahead of the recession. And then we moved into 2008, and all the numbers were negative in 2008, sharply lower. And then we started seeing hundreds of thousands of jobs being lost. You're going to see the same thing here. So be aware of that. We're going to also get, before I leave this, again, we got that private payrolls number. It's supposed to be positive, came in negative. I told you this was coming. I expect the same thing's going to happen here at the Labor Department data that we're going to get with the jobs report. We're going to get, that's tomorrow morning on Tuesday. On Thursday, the 18th, we're going to get CPI, again, year over year, is supposed to come in 3.1% higher than the 3.0% previously. Again, this is a September number. We don't have the number for October, so again, we'll see if we get that information as well. This is going to be the November number. They skipped October. We'll see if we get that information for October and November here. Year over year is supposed to be the same as it was at 3% for the September number. And if you start seeing inflation begin to tick back up, which again, I've been predicting that it's going to, and you start seeing weakening economic data in the Labor Department, we are in the labor market, I should say, again, concerns about stagflation. Seeing the 10-year yield rise ahead of the Fed having already broken out in an inverse head and shoulders pattern. And on Friday, we'll get the Bank of Japan likely raising rates. And that has been associated with sell-offs in the stock market and with Bitcoin. Please support the channel with the link directly below that allows me to be able to provide you this information. Again, I don't have any sponsors. I don't have any affiliate links. I turn those offers down. I don't want to sell you anything. So I just ask that you partner with me, do what you can to help out. Follow the link below to take you to a secured site, and you can donate any amount you want or make it a recurring donation. If you do that, I thank you. If you could just take a moment to help out and support the channel today, if you could just step up to the plate, I would really, really appreciate that. I thank you for your consideration for that. And we got the VIX getting an inverted hammer. It's not gotten confirmed with today's session. We got a candle of indecision on the VIX, a doji candle of indecision. Again, we are back above now, back above the lower Bollinger Band. We turned back above it and watching to see if we start seeing the MACD firm back up and turn positive and get back into positive territory. If you get back above the 50-period moving average, the S&P will get a much, much bigger sell-off. And if we get back above the 50 and the 200 period, the black line, the 50 is a green, they end up getting a bullish cross. You can see volatility sharply increase. We had the stochastic turn up, turn back down, and it formed a little divergence here with our bullish cross here. We formed this little bullish divergence, getting the inverted hammer there. This is likely going to play out and give us a lot of volatility, and we could see that happen this week with all of the things I'm talking about. Jobs report, the CPI inflation data, and the rate hike from the Bank of Japan will unwind the yen carry trade. Hearing so many people on social media, oh no, this time it's different. We're already seeing a pretty dramatic sell-off ahead of the rate hike from the Bank of Japan. With Bitcoin, the stock market is likely going to play catch-up and get a much bigger sell-off. We got the bearish reversal of conditions after we had those 9 counts set up. Remember I talked about the 9 counts, and here's Nasdaq. We got the reversal of conditions, shifting momentum on Friday. Now we're taking out the 50 period and the 20 period moving average here. We're down 0.5% today, down 100, almost 130 points here on the Nasdaq 100, and that gave us a bearish MACD cross. Again, we've seen the stochastic roll over there. And with our sell-off here, it's broken 80 now. We had formed a bearish divergence. Sorry about that. I had to take a phone call. We got that bearish MACD cross on the NASDAQ. We've got the stochastic going into the negative region, and we're taking out the 50 period. We got the bearish reversal of conditions last Friday. The Awesome Oscillator bars, I told you, had started to turn red last Thursday, and then I told you I was watching to see if S&P would join Nasdaq and getting a red bar. Did on Friday, and both of them got a bearish reversal of conditions. Nasdaq daily chart here. As we start the week off, we're taking out the 10-week moving average. We'll see if we get a reversal of conditions here in the weekly time frame by the end of the week. But we've got the stochastic starting the week off, rolling over here for the Nasdaq in the weekly time frame. The MACD and the Awesome Oscillator both remain bearish. Nasdaq 100 weekly chart here. If we get a bearish reversal of conditions and by the end of the week and close below the 10-week moving average, as I talked about last week, if we do that this week, then again that would be a sign of weakness. Now S&P is still holding above the 10-week moving average, but the stochastic is tipping lower and touching the signal line. Again, we'll see if by the end of the week we get these bearish stochastics completing divergences by the end of the week, closing below the signal lines. Nasdaq's already doing it. S&P is getting a bearish touch here. Again, Awesome Oscillator, MACD remain bearish in the weekly time frame, but we're starting the week off down. We'll see if we get this reversal of conditions with the jobs report or the inflation data, or maybe both, and we go in to get the rate hike from the Bank of Japan. S&P weekly chart here. S&P in the daily time frame on Friday joined Nasdaq in getting the red Awesome Oscillator bar, and with that we got the bearish reversal of conditions for momentum with both of them. MACD not rolling over yet. The MACD did roll over on the Nasdaq today. We'll see if we get it tomorrow or before the weekends here. We still off with the jobs report. As I keep saying, you're going to see a negative number soon, and maybe we get it now. It's going to happen either right when the recession starts or right before. We already had the negative number in June. It's coming. You're going to get a bigger negative number. Markets could have a very negative reaction to that. See if we get it this report. We're holding above the 20, the blue line, the 50s, a green, but we closed again below the 10-period moving average. We closed below it there on Friday, closed below it again today. Stochastic is now breaking 80 today, again with that bearish divergence that formed on the daily chart. S&P daily chart here. Last time we got the reversal of conditions, we rallied back up. We got a lower high, but we ended up selling off nearly 6%. And again, we're continuing to see the distribution And the AI sell-off with the bursting of the AI bubble. It's happening. We're seeing the distribution. Again, going into Thanksgiving, that the bigs, the big institutional guns, would let the retail investors, the herd, run it back up so they can sell into the rally. That's what we keep seeing here. We keep seeing the selling into the rally. And as we've gone sideways, we keep seeing this, and we're going to see more of it here, and likely continuing on into January. Get a big sell-off, you might bounce into the holidays, resume the selling in January. We'll see how it happens. But if we get a big, ugly, listen carefully, if we get a bad jobs report where we see inflation start ticking back up, or both of those scenarios happen, you can get a really, really ugly bar in the weekly time frame this week and see some really sharp, wide-range bars here in the daily time frame. Bars that look like this, these sharp, sharp declines. Signals have turned bearish ahead of the jobs report. So again, could the sell-off continue? Could it be a knockout punch this week with the jobs report, the inflation data, and the Bank of Japan raising rates? Now, don't forget, we got the 913 double sequence count reversal signal here in the weekly time frame. We went a little bit higher there in October, sold off, came back. Now we've got a lower high. We'll be watching to see if we come back and take out this low over here in the weekly time frame. The 9, we got an immediate trend extension with no pullback, formed a 9-9 and evolved into a 913 reversal. If you get a lower high, you come down here, take out this low here. After we had dropped nearly 6%, you're moving back towards the 50-week. Eventually, I think we're moving back towards the 200. Probably won't reach it if we bounce off the trend line. But if we do, then you have the April low. We have that rising channel that is near the 200-week moving average that I've talked about in the weekly time frame. Talked about the lower high scenario on the S&P. The higher high scenario would be that we go up and we hit this trend line again, which would be just directly overhead, and see something similar to 2022. I've talked about this at great length and detail. I'm not predicting that happens. I think we've already topped and we'll see a lower high. The head and shoulders on NVIDIA, I think that's going to allow the market to go lower and turn off of the trend lines of resistance. But if we do go higher, you have a lot of resistance directly overhead. I think we're going to end up sharply selling off and catching up to Bitcoin, which is already confirmed a bear market. You can see my latest Bitcoin video at the end of this one. I'll link it at the end of this video. And I go through the Bitcoin weekly charts. The stock market sold off with the Fed at the last meeting, and now this meeting we're seeing it. So is Bitcoin. The rate hikes with the Bank of Japan, I've shown this, triggered sell-offs with Bitcoin and the S&P. So I think the stock market's going to begin to dramatically sell off and play catch up to Bitcoin. Here's the trend line, though. If we don't reach the April low, this is the trend line I'm watching, and that's near the 200 period moving average. I'll just bring it up here in the weekly time frame. You can see the 200 week just under this trend line. So again, watching the 200 week, watching this trend line. If we drop, we don't reach the April low, you might reach this trend line and try to find a short-term bottom there. But I think we're headed down there. Eventually, the stock market will play catch up to Bitcoin. Bitcoin is the leader of the pack. The stock market has a positive correlation with Bitcoin. Right now, there's been a short period of decoupling. The stock market is about to play catch up. As we slammed up into that trend line, the channel that you just saw, we got this 913 count, went a little bit higher, got the topping tail, and it was a gravestone doji, turned down, and now you're getting a lower high, at least for now, unless we get that 2022 scenario, but signals have turned back to bearish with momentum. And then about a week and a half ago on December 5th, we got that 9 count. We went a little bit higher than that 9 count, and now we're getting the momentum starting to shift. You got to take out this 50 period moving average here in the daily time frame. We've got these other counts that have led to volatility. This 9 count, we got a 13, got a little pullback, and then we got a 13-9 double sequence count reversal signal that led to this nearly 6% sell-off, and now we have this one here. So again, if we come down, you need to come down and take out this low from late November, and if you do, you'll confirm the hanging man candlesticks in the monthly time frame that I've talked about and have shown you. 9 counts playing out, leading to the reversal of conditions, and now Their signals are starting to turn like the MACD on the Nasdaq. You had that 9 count also on the Nasdaq 100. Here is the Nasdaq closing below the 50-day moving average. Again, the 9 count here. And we have other 9 counts again associated with distribution. And again, you're now seeing it again. We're probably going to head down to try to take out the November low, confirm the hanging man's and candlesticks in the weekly, monthly time frame, and eventually head towards these 200 period moving averages and establish a lower high, lower low. We had one over here, but we moved above it, so we need to take out that November low to reaffirm a lower high, lower low. Nasdaq daily chart. Now, we got a 9 count today on the Russell daily chart, completing it. And again, we turned into that major resistance, the channel, the upper channel line. Everybody's, oh, the Dow's making new highs, the Russell's making new highs. This is so bullish. And they're reversing off of the channel lines in the weekly time frame. And now you're getting this 9 count as the reversal's happening for the Russell here in the daily time frame. S&P did not make a new high. The Russell did. They often diverge at turning points, one making a higher high, but the other not, and that's what we have right now. We recently had that 9 count on Apple. Apple's getting a bearish engulfing candlestick today. Apple has helped the Nasdaq and the S&P, but Nvidia, when Apple made new highs, Nvidia did not. Getting a bearish engulfing ahead of the jobs report. If it's an ugly report, as I think it's going to be, you could see a very ugly sell-off. Apple's weekly chart we got 3 weeks ago, or just 2.5 weeks ago, I should say. We got that topping tail. We got the 9 count, the 9-9 reversal signal. Looks like it could form a massive head and shoulders here if we move down to the 200-week moving average. Again, I think you're going to see a very, very ugly sell-off and move below the November low here in December. Showing you that, again, we're seeing warning signs on Apple here with this reversal. Even though it moved to new highs and helped the Nasdaq and S&P, Nvidia has been struggling, and we're seeing the AI sell-off. Well, the sell-off began with Oracle and Broadcom last week, triggering the beginning of another AI sell-off, which I warned you was coming. But here, a Gravestone Doji might confirm that here this week for Apple here in the weekly time frame. But you're getting warning signs. And we got Bitcoin selling off more, which, again, Nvidia is setting up a very similar looking head and shoulders with the lower high for the right shoulder, a sloping neckline. It looks very, very similar to what we had with Bitcoin. And again, Bitcoin's now dropped 36% from the high. And again, with the Fed cut, and this is a chart I have marking the Fed cuts that have been associated with the sell-off, the Bank of Japan rate hikes, it's done the same thing, only worse. So again, we're likely going to get a couple more legs down with Bitcoin in December and January as the marketplace catch up. This little head and shoulders and what I think is forming a larger head and shoulders with Bitcoin. If we go back, this left shoulder over here, the head formation, I think you'll take it out and take out the support level and get a lopsided pattern. But that's what it did at the last top, by the way. But again, I think that you're going to see something very similar here with NVIDIA and the Nasdaq. NVIDIA just overthrew the upper channel line, just like we breached it down here, but then it started to reverse, and it's been struggling to go back near the highs. NVIDIA was up 0.73% today, but again, you've got this potential right shoulder. Looks very similar to the head and shoulders that Bitcoin set up. Again, a downward sloping neckline with the lower right shoulder. Very similar. Talked about the gap lower here. We may not fill this gap until a much later date. But if we start to break down from this pattern, holding below our 50 period, again, we broke the 50, the green line. We went back to it. We got rejection there. Now we're back below the 10 and the 20 period, which are starting to point down again and getting a bearish rearrangement of the moving averages. Taking out the pink line, the 100 period moving average, and we're back below the momentum cloud. So again, not looking good. RSI remains pegged in the negative region, and we have the MACD in negative territory with the stochastic rolling over, breaking below 50 now. These bearish diversions is going on in the weekly and the monthly time frame for NVIDIA. So again, if we continue to see the AI sell-off, can begin to weigh heavy on the Nasdaq 100. You can see it, the market play catch up to Bitcoin. Nasdaq 100 had a rising wedge. We broke down, we back tested, then we had another break of the trend line from that low after the break of the rising wedge, and then we broke down there and back tested that. We've got a lower high, potential head and shoulders. If we got to see a breakdown, you've got this head and shoulders, just like NVIDIA, only it's lopsided in that the right shoulder is higher than the left shoulder. But again, if we break down, you could be headed back towards these 200-day moving averages and eventually take them out and again play catch up to Bitcoin. I think something's about to happen. It's going to allow the stock market to dramatically catch up to Bitcoin. Bitcoin's going to take out the April low, and the market is going to move towards these April lows, as I've talked so much about. We're seeing the MACD roll over today, and that's now confirming a lower high. Stochastics turned over. It had a divergence there and it's pointing down. So again, we could see a sell-off with the jobs report or the inflation data or both, and then we're selling off ahead of the rate hike by the Bank of Japan. This is all now getting priced into the market with the Fed giving us a hawkish cut last week, as I warned you, was likely going to be the case. This broadening formation on Nasdaq, it could evolve into a head and shoulders though. But we'll see if we get the lower high, the lower low here in the daily time frame. Had it previously, but it was negated by moving slightly above the previous peak. If the MACD rollover moves the MACD into the negative region, you should see a much bigger sell-off. The RSI is moving back below 50, likely confirming a lower high here. We had these really nice divergences set up on the RSIs in the 60-minute time frame. We're now below the 200 period, the 50's curling over, and we've lost the cloud here. So again, if we sell off with the jobs report or the CPI or head of the Bank of Japan raising rates, again, we could see a sharp decline this week. Any one of those events or a combination of those things. MACD in the hourly time frame, we're in the negative region. I think by the end of the month, I think we're going to confirm these hanging mans in the monthly time frame. We had that in the month of November. I think we'll end up closing below the November low. We had a rally, but it's fizzled out now. We've got negative for the month. Again, got to confirm the candlestick to have it mean anything. Got the hanging man on the S&P and the Nasdaq here. I think we'll close below these levels. I think you could see some really ugly looking red bars in in December and January here, and give back a lot of this rally off of the April low. We've had the divergence in the weekly time frame on the RSI. This could confirm a lower high. The other scenario would be we get something like what we had over here in 2022, where we pop a little bit higher. This was just about over 1.5% higher to form that divergence. That would form a triple divergence here. We already have the divergence. If we confirm a lower high, we need to get the lower low, and we need to confirm in the monthly time frame a close below the November low. If we bounce off the trend line from the November 2022 low, connected to the April low of 2025, again, you could be moving back here, or you might get closer to the 200 week or closer to the April low. But again, if we try to bounce around the trend line, you might get kind of a slanted neckline, or we could breach the trend line and then end up back testing it. So just different ways it can play out. S&P weekly here, the MACD rolling over, the price oscillator rolling over. If the large divergence, now the stochastic is trying to turn back down here in the weekly time frame. S&P got that hanging man candlestick in the monthly time frame, just like Nasdaq. Again, if we rallied and it's fizzled out here, if it continues to move lower over the month of December, we can confirm a close below the November low and confirm the hanging man candlestick. Now, the top was back over here in October for both Nasdaq and S&P 500. So if we do that, if we confirm a close below this hanging man candlestick, you'll have a lower high, lower low confirmation here would likely validate this as a top. Then we can play catch up to Bitcoin. Gapped higher at the open on the 5-minute chart. We gapped right up into that 200 period moving average, got a black candlestick, got a gap and trap on the intraday charts here. And then we kind of sold off and went sideways, chopped around here in the 5-minute time frame. The 50 is still below the 200. If we hold below the 200 period moving average, you start taking out the low over here, then we can resume the decline with a bigger sell-off. We had divergences on the 50-minute chart, on the 60-minute chart, and they have given us here in the 15-minute time frame a sell-off below the moving averages of 50 crossed below the 200. So the risk is now that we are now completing a lower high, and we're now going to move down to take out the November low. Nice divergences though on these 60-minute charts, and again, so far we have a lower high below the 50 here, below the cloud. You got to take out the 200, and you got to be able to all the signals turn back to bearish to come back and take out this November low here in the month of December. We'll see what happens with the jobs report. 60-minute time frame, we become a little oversold, but again, remain at extremes for an extended period of time at overbought and oversold conditions. Do we sell off with the jobs report, or is it nothing? And if it is, it could start triggering the sell-off, or do we see a sigh of relief with it and off with something else like the CPI inflation data or the Bank of Japan rate hike? Momentum signals have turned bearish. If they continue to remain bearish, we could see them spill over, those signals spill over into the swing trend signals. Again, here is the Nasdaq daily chart, about ready to try to flip the cloud if we get further selling pressure this week. S&P a little bit further away from the lower boundary of the cloud, but again, you start seeing a sell-off. You can flip the trend signals here in the daily time frame. But we saw the reversal of conditions there on Friday, and we saw momentum shift here. Now we need to see that spill over into the swing trend signals, and momentum is shifting. The bars have turned back to bearish. We got a reversal signal here, just as we did over here and over here and over here, right before we saw the distribution take place, which again, I've been warning you, institutions let the retail investors run it back up so they can sell into the rally. They're selling into the rally, and we're seeing the AI sell-off. The AI bubble is bursting, so they let the retail investors, the herd, as I call them, run it back up on lighter volume. But will these signals now spill over into flipping many of the swing trade signals back to bearish? Saw the same thing on the Nasdaq 100. Again, bars Friday flipped back to bearish. We had already previously gotten the bearish signal over here, very much like what we had at the top the day after the Fed meeting, and with the lower high over here and the reversal for the left shoulder. So we'll see if these momentum signals play out now. We are getting the bearish MACD crossover. If they play out, should start seeing more and more signals turn bearish. And again, we're seeing weakness on the stochastics in the weekly time frame. So it's not just momentum here shifting in the daily time frame. And I want to point out we've continued to see the volatility surrounding Japan raising rates. I've marked it here in the past, back in March of 2024, back in July of 2024, back in January. We started to sell off. We went a little bit higher in February, and then it got the sell-off of 21%, similar to that 2022 scenario. It's still possible. I think it's less likely, but I've talked about it being a possibility. Still think we peaked in October, but I don't want to rule that scenario out. But we've seen a distribution associated with the Bank of Japan raising rates and Fed sell-off. I've talked about this. We peaked back in October. That was the Fed cutting rates the second time in October, and then now we've seen another sell-off surrounding the Fed's December cut. Post-Fed sell-off, I warned you that was going to likely be the case. These are drawdowns with the Bank of Japan raising rates. The unwinding of the yen carry trade. They have to sell assets as the yen rises. They have to pay back these yen denominated loans. There's a direct correlation to the Bank of Japan raising rates or the yen rising and the unwinding of the yen carry trade, creating volatility with crypto and Bitcoin and the stock market. See the charts on this for Bitcoin. My video is linked at the end of this one for Bitcoin, and I show you those charts in that video. But I'll be watching to see if some of my swing trend signals turn back to bearish. They look like they're about ready for that to happen. Here's the S&P again. Now here it already happened with Nasdaq. Again, we started to see weakness with Nasdaq, and here we got it on Friday, already turning bearish for the Nasdaq 100. We're going sideways, but S&P has turned off of resistance here, and if we go down, break the November low, you'll be breaking this support level, and I've marked some other support levels here that near the 200 period and below it, and horizontal support from the 2022 peak, the 2025 peak just before the February sell-off. So again, just some support levels I'll be looking at. A bunch of gaps here that are likely going to get filled and play catch up to Bitcoin. We'll be watching this week with the economic data and the rate hike out of the Bank of Japan there. Do we start seeing some of these signals begin to turn? Now here with the rally back up with Nasdaq, again, the signals have remained bearish with the lower high that is set up. And now we're turning back down. The signals weren't able to flip back to bullish. So that's interesting. But S&P did turn back to bullish here. And again, we need to see if the momentum signals play out. We need to see these swing trend signals begin to turn back to bearish. We are seeing signs of cracking on the Nasdaq. Momentum has flipped for both Nasdaq and S&P. We'll see if it spills over into all these trending signals turning bearish.